Let's get you updated on our grain trade, shall we? Let's start with that corn market and our quotes provided by Bar Chart. On the big board today on the corn, we continue to have a little weakness. We have December corn down 3/4 cent at 509.5, but it's about, we'll call it about a nickel off of our earlier low of the day. Now in the soybean trade today, we have November down 2 3/4 at 12.76 3/4. There has been a lot of talk about supposedly USDA inadvertently, I'm putting that in air quotes, inadvertently releasing some acreage numbers late yesterday or something that were supposed to come out tomorrow, and the market did not take that very well because it seemed to indicate higher corn acres for one thing. And we'll see what they have to say about that in the coming hours. Now, on the wheat, we have December Chicago wheat 6 3/4 lower. We're at 702 3/4 per bushel. In the Kansas City wheat market, December down 9 1/4 at 695.5. And in spring wheat, we have the Minneapolis December down 15.5 cents at 8.79 per bushel. Meanwhile, in the cotton, we have new crop December 10 points higher at 94.18. It's that time of the week where we love to check in on the lumber industry and the lumber market with help from Robin Cross of StoneX in Chicago. Robin, considering the market action that you and I have witnessed over the past 2 or 3 years here, it seems like it's been pretty timid here this week.
Timid seems like a bit of an understatement this morning, Marlon. Coming in today, September doesn't even have an official open. Now, granted, there's only 200 cars left. The market is totally in expiration mode. You know, September lumber goes off the board next Wednesday, the 15th. So market down. So the market, you know, everything is all eyes kind of on SEP expiration and the prevailing cash market, right? So let me just kind of recap what's been going on. So after the massive rally to 1,700 and then a preceding break to 450, a couple of weeks ago I told our viewers that, you know, I think that lumber's at investment level. Even though we were about $60 premium to the underlying cash market, I did some research. I looked back 15 years and I determined in a downtrending market, the best time to buy cash, actual physical cash, is about 2 weeks leading up to expiration because the mills do whatever they can to, you know, alleviate the excess, so then this way there's no real impact from deliveries through the board. So that's typical. So, right, so we get down, cash got down about $390. Some guys even bought lower on bigger blocks, but, you know, that stuff is really not too accurately reported. So then what happens, right? All these guys buy all this lumber, market sits, board rallies because we had some curtailment announcements, if you remember, a couple weeks ago. So after going to 450 investment level, the curtailments come out from Canfor in particular, made the market rally all the way to 700, right? So it was a big rally. So that's kind of been your range, you know, and it's funny, that's what I would consider the tradable range, right? I would consider 450 major support, and I would consider 700 major resistance, right? And I think the market's been flipping and flopping between those two locations. So then what happened, right? After you get those announcements, people realize, hey, lumber just traded $390. The board's not going to hold this $700, you know, big premium, you know, big $200 premium. It's proven in the past that if you sold that premium, you've made money literally 9 out of 10 times. So guys don't like to fade that. So naturally, the market breaks all the way back down. Then income last week, we had holiday days off coming up. So a lot of guys took 4-day weekends. So there was a lot of rumors in the market that there was going to be additional mill curtailments coming out, right? So boom, we jumped. Guys wanted to cover their shorts and be done for the holiday, run the market all the way back, you guessed it, to key resistance 700. And then in the last 2 days, since like soon as we came in this week, the selling race was on. It was very little volume, broke us from 700 all the way back down to the 490s. For September, and then for November, we got all the way back down to about 585 after making a 695 high just yesterday. So I think the market is really trying to find itself. It's proven an open interest. After you see open interest go from, you know, we were getting close to about 3,000. We're now down to 1,906 cars coming in today. And why is that significant? Because that's the lowest open interest since May 2002. And if you remember way back then, you know, it was right after we had September 11th, the markets were a big mess. And it really kind of disheartens me to see that open interest after 20 years of being in the market is right back where we started. So I think we just got to clear some cash up, kind of get some of these old pre-existing basis trades out of the market, and we'll really see what lumber's worth going forward.
Absolutely.
You know, and I would still say 450 is investment, you know, for sure. I think guys shouldn't be pressing the market under 500.
Wow, that was quite a journey. All right, well, thanks for helping to navigate where we have been and where we are right now. And appreciate you explaining all that. Robin Cross of StoneX in Chicago joining us. We'll be back. I'll update you on our livestock trade coming up next.